Okay, we're live. How's it going, Ron?
Good. How are you, Travis?
I'm doing good, man.
Of course, this is our Fiesta Friday show with Ron and Travis, not our real names, but it's a meme from a while ago. Just kind of like a mini bootleg weekly. This is our second episode. So we come in basically with one or a very limited selection of comments, a little bit shorter than bootleg weekly and Q&A as always. This has been a pretty turbulent week. How are you hanging in there, Travis?
I'm doing okay, man. I bought some stuff, and I mean, it's not a great week to have, but all things considered, it was fine.
Yeah, it started out pretty nice week, and then the last couple of days has been more painful. I kind of doubted based on, and we're going to talk NVIDIA, by the way, a little bit later with Steve, and also some SoFi stuff. So we'll mostly focus, I think, on this Anthropic stuff and just what's happening in the macro specifically. But like this week, I just kind of curious if anything, what was the most surprising thing for you this week? Good or bad?
Yeah, there we go. Fixed it.
Nice.
All right. Most surprising thing this week in the market. I don't even know, man. This week has felt like so long. I dropped my little in the market.
Yeah.
I don't know. The fact NVIDIA sold off on earnings, Nebius fell on some fake news, and then it fell again on CoreWeave.
That was going to be it for me.
It's just like,
the most surprising thing in the market for me is that somehow the ticker symbol for CoreWeave is NBIS, which I thought was a bit Nebius when I was buying it. But apparently, when Nebius has already had fantastic earnings and CoreWeave has not as good earnings, well, Nebius is terrible. Let's sell that. And also, when CoreWeave runs into funding problems, which was much ado about, it was beyond what was actually the issue. But regardless, when they have potential funding problems, well, even though Nebius is 60% funded by their own customers, yeah, let's take Nebius. So that was just weird, but that can certainly happen in the short term. The NVIDIA stuff, we'll talk later, but like that was actually kind of what I was assuming was really good print, really good guidance, and the stock market just would be unconvinced, and NVIDIA would probably trade a little bit down, and the market would be pretty weak for a while. So didn't change anything. I didn't try to play earnings or anything like that, but yeah, here we are. I did sell covered calls a little bit more aggressively than normal, but now as far as this market, I don't think I've seen as many year-to-date charts and things being shared on X recently. Is that a little bit strange?
I mean, man, like we have flip-flopped for so many weeks in a row that I'm not even surprised anymore. Like, it's getting kind of annoying, but at the end of the day, it's not like, so for example, Nebius, for me it fell in December to $70 and then went back up to, 110, and then it fell back to 80, and then it went back to 110, and now it's back to 90. So I'm like, yeah, I mean, it sucks, but it's not as bad as it was, or, we've been through this before, So yeah, but I get it. I get some people are like, well, my thing has just started falling. That sucks. I think like there's still uncertainty in the market for sure, with regards to the AI trade, but also with regards to just everything. Like, honestly, man, I don't know. Maybe we talk about this, maybe we don't. But I've been seeing this Jane Street stuff. I don't know if you've been following this story.
Yeah.
But it just feels like there's so much manipulation in the market, and like I don't know if I should attribute that to that or what the case is, but yeah.
Okay, let's actually start there. And I actually had a little bit different take. I think part of it is true, factual, and real, and then the part that you shared today with me that we were talking about just briefly. I think that that's way overstated. But that's a good place to start. And then let's also talk some Anthropic, Pentagon, LLM, OpenAI, and ramifications for other sectors or segments. So
Sounds
you
good.
did a video on Jane Street on the crypto side. I guess you want to share with us just kind of a recap on that. Not saying don't watch Tevis's video, but what exactly is the tie between Jane Street crypto and maybe even a little bit of tie into Ethereum / BMNR?
Sorry, dude, I'm so distracted because I'm trying to make this thing because the Nebius CoreWeave thing reminded me of a meme, and I'm just like, all right, I kind of want to make this meme now and put it out. But I will do that when I'm not asked the question. The Jane Street thing, yeah. So these guys basically were sued because they had some insider trading back in 2022. Are you pulling it up? Hold on.
Yeah, well, I'm just showing they deleted all their posts. Yeah. I don't know that they had many posts before, but yeah, it's all gone. Not really a great look, especially because, I mean, people can go back and look and see what you said, but there's a lot of smoke there for sure, but specifically with crypto, go
on. Specifically with crypto, and then what happened was DJT, which is Trump's SPAC or Trump's company, True Social, named them because apparently they're doing some shady shit there too, like outside of the crypto space. And apparently more news is coming out that they had a hand to play in like Bed Bath & Beyond tanking. And so I'm like, are these guys the architects of all of this pain and destruction in the markets? And I think DOJ opened a suit on them. SEC opened an investigation as well. So we'll see how it plays out. But like, yeah, some drama in the markets for sure.
Yeah, India also banned them, I believe, from trading for a short period of time. The Bed Bath & Beyond stuff, I think it's overstated. They actually had a small positive position looking back. It's something that oftentimes a fund like that, I don't know if Jane Street typically does, but what they might have done on Bed Bath & Beyond was more of a hedge than anything. So, but the crypto stuff seems definitely legit. But yeah, it's not the reason for the market uncertainty. It's not the reason for everything falling down, but it's one of those, just another facet. And I am glad that we shifted away from extremely strict overregulation but there is still some regulation that, you can't just willingly do whatever you want and get away with it indefinitely. Thankfully, Jane Street looks like that they're caught. And I do hope that they receive more than like a slap on the wrist type of fine, which is far too often in these situations. But yeah, there's definitely some other reasons why the market is not doing well. And I think a big part of that, which we're going to save, is the NVIDIA stuff, and just the market doesn't really know what to do with AI right now. It is kind of interesting though. Like earlier this week, a lot of the SaaS names, which Palantir is in the sector and space, even though it is SaaS, but there's a lot of differences between it and traditional SaaS companies. And we had a nice rebound, and it looked like maybe it was off the bottom 2 days ago. And I was thinking, okay, but funds were just selling this left and right. Why would they actually buy this? Feels like retail. We'll see if it actually sticks, and it didn't. And then, so anyway, when they were rebounding, Palantir was still down. And then today, there was a price target upgrade, which maybe is the reason for this, but it actually was holding quite firm. Number of other names out there also were up, which usually you would expect them not to be in such an environment. Although almost everything in my portfolio, except for Palantir and VG, were very red today. So if one of my stocks was down like 3%, I'm like, all right, that's awesome. Only down 3%. So, but yeah, we're in a bit of uncertainty still. There's a lot of macro uncertainty, geopolitical uncertainty. There's been a massive shift in the way that tariffs are being handled, and then of course with the Pentagon and Anthropic, uncertainty as well, and uncertainty in the role of LLMs going forward. We'll have to see what that looks like.
You want to see what I just made while you were saying all that? it has a little bit of profanity, so you might not like it. Do you want me to play it?
No, that's okay.
I just posted it on my X. It's just a meme, and it just reminded me of this Nebius sell-off. It's I'll just describe it and I'll play it. It's the guy that he cuts off another. He's in a car. He cuts off another guy in the car, and he just starts like swearing at one of the passengers. The passenger was like, "I didn't do anything," and that passenger was Nebius. And so, but yes, I agree. It's been kind of a crazy week in the markets. PayPal found yet another way to disappoint investors by just giving them more trust issues than they already have. And then we also had, honestly, man, so much Anthropic news this week as well. And I'm sure we can touch on all of that stuff, but it's been an eventful week. Like, it's felt like a long week, you know? But maybe it's also the fact that like I've just been sort of doing this coding stuff on the side and I'm totally hooked. And it just feels like I'm getting more stuff done and I'm more productive. And as a result, it feels like the days are longer, you know, because I get so many things like done in a day that I can point to of like, hey, what did I do today? And when I think of Monday, I'm like, Monday, like none of this stuff existed Monday, which is crazy because it's just, I was going to make a post today, but I didn't. And it was basically going to be like, you know, I feel the most productive than I have been in a long time. And it's wild, dude. Like I've been keeping the log of like all these ideas that I want to do. And it's just like, I don't feel like there's enough hours in the day. Yeah, go ahead.
No, I was just going to say for sure. I saw you got a super chat, so you might want to throw that.
Thank you for the $5. A lot of things going on in this world: Ukraine, Iran, Mexican cartels. Oh yeah, that happened this week as well. Was that this week? Mm-hmm. Were they? Yeah, I think so.
I believe it will start over the weekend, if not on Monday. Mercado Libre. I know, like, if you're living through it, like that's terrible. Like, I always think, from an investor standpoint, Mercado Libre reported earlier in the week. Pretty good earnings, not amazing earnings, but there is some geopolitical stuff there anyway. And they got sold off really hard. Nubank also reported on the same day as NVIDIA, kind of got overshadowed. Good earnings, but again, geopolitics stuff. And they got sold off really hard after hours. So,
do you want to address the disgruntled PayPal investors who are now attacking you and share your thoughts around whether you think this can be going much lower or not?
Yeah, it's there was a certain gentleman, I won't name him or anything, that oftentimes tags me still, even though I'm not in PayPal anymore. And I will occasionally share my thoughts on PayPal. And rarely will I do it on YouTube video. I did one last week. I do have one other one planned, just kind of what happened, retrospective, what were the early signs and indicators. And mostly that's just for my own self, just a better spot when the thesis is really shifted and broken. Because I think I could have seen it. There were definitely signs a little bit earlier, specifically related to that communication strategy. But yeah, this certain gentleman did not like my statements on the buyout. Now, the Stripe stuff, essentially, like, I think that it's credible, even though there was some information that came out here today that people were saying, oh no, Stripe is actually not interested at all. By the same, I think it's actually yesterday, by the same author that was actually supposing that Stripe was. I do think that they're interested, and I do think that they're the most logical one out there among the competition to acquire the whole thing. And it depends, on course, on the board of directors' price. But basically, before rumors hit for any buyout for fintech, the average premium between that moment and when a deal actually is announced is usually 30 to 50%, which would put it at $52 to $60 per share. Now, I think that PayPal probably would get the higher end of that, maybe a little bit beyond that. But a lot of PayPal investors are like, no, they're going to get $125 a share. And I'm like, no, there's zero chance that they do. If the board wants that, I mean, they can want it all they want, but there's no buyers for it at all. There's a reason why they were only interested not even in the 50s, but when PayPal fell credibly beyond the 50s, even briefly into the 30s. So I think there's a decent chance that they do end up doing some sort of a acquisition, not PayPal, but be acquired. And I think it might be that Stripe gets most of it, and then there might be a bidding war for a Braintree and possibly Venmo. Bidding war is the best case scenario for PayPal. But anyway, yeah, he did not like the price target. A couple of people were saying, oh, just Roy having sour grapes. I'm like, dude, like I suffered along with you guys. If there's any people left in PayPal, I hope you make out like a bandit. But if you're expecting $125 buyout, that's not happening. I think even 70s is hard. It requires multiple bidders.
Yeah. And dude, we also got the Netflix buyout news today or this week as well. It's been a great those poor bootleg weekly guys that have to cover all this shit. Our show is just a Q&A show. This is a big week for us, and I think it's going to be a big weekend too, with just escalations that are going on in the geopolitics side of things.
Yeah, and I think the thing that's even bigger that's weighing on the markets than all these is the private equity stuff. It started with Blue Owl. Well, it didn't start with Blue Owl. Like Tricolor was last year. Well, there we go. Tricolor was last year, and that was one of like several cracks. Blue Owl was the bigger one this year, and of course that spilled over to CoreWeave, and because Nebius apparently is now CoreWeave, it spilled over there too. But a lot of financial names went down immensely. This is, I think, the worst day for financials since April 2025. It's not like like going back to Liberation Day, that moment, but like you rarely see. You might see SoFi because it's more volatile and it's been going to the downside by quite a bit, but you rarely see like the Banks of America, the Wells Fargo, go down as much as they did. Bank of America was down about 5%. Wells Fargo was down 5.65%.
Look at Amex, dude.
Yeah. And one of the stocks, actually my most recent stock that I own, I was like, I've missed out a couple of times already through cash secured puts on an entry. I want some. I'm not going to load the boat up at this price, but my average is about $30. Well, Figure reported earnings. Did you see any of my posts on Figure? Any thoughts on how much they're growing? Or
no, I need you to do a stock tank on Figure. I will not take no for an answer. You have a backlog of stock tanks, man. Let's go. Like use Gemini and get your presentations going. And we need this. The community needs
soon, definitely. I still got to get the dissertation done on the 12th, and that'll give me some more time after that. But no, Figure is one of those I definitely do need to. I actually have a collab article that's going to be coming out fairly soon. We haven't discussed exactly when. With some of the guys out at Artemis, they provide basically a look into the blockchain. And anyway, Figure is growing essentially 100% year over year in revenue. Knocked it out of the park as far as earnings. EPS was a little bit light because of some one-time stuff. Mostly related to IPO, but everything else is like, dude, they'll share a product that they launched like 3 months ago, 6 months ago, a year ago, and it's just like ridiculous growth. I know it's off of a smaller baseline, but everything. Actually, let me just pull that up real quick. Yeah, their investor relations, because it's a short slide deck, but it's.
You talking your book, Roy? Is this what's going on right now? You talking your book?
I mean, a little bit, but so this is caught up though, and it's one of those case in points of what can happen in a market, that a market can mischaracterize or misunderstand something, and Figure is actually caught in two different buckets. It's caught up as a crypto company, and people are like, "Oh man, it is a crypto company," but they're like, "It's a crypto company. Crypto is going down a lot. Figure must be getting crushed." And the reality is, I think 6% of their loans are actually backed by crypto, and none of those, like they even talked about them. They're like, yeah, they said the nice thing about crypto is we don't have to wait to liquidate if there is an event that requires it. But we've had none of that. We're not even close to that level. And it's 6%. It's down now 66%, which it should have never been in the mid 70s. But I mean, like, yeah, these are things that they've launched. Like this is launched February 2025. The yields actually in circulation. This is the first SEC registered stablecoin. That the yield is actually not based on 3-month treasuries, but instead real world assets that are there on blockchain. Democratized Prime, which is their prime lending platform, 206 million, and that just launched in June 2025. A lot of reads like that. Like look at this. Figure Connect is up 131% year over year. Yes, it's a very small base, but yeah, this is a consumer loan marketplace. Adjusted net revenue is up even higher. It's 106%. If you want to go with just net revenue, I think it was 93% year over year. The EBITDA stuff, it's off of a small base, so I would take this with a grain of salt. But rule of 60, I don't know. 160 seems pretty good to me, Tavis.
Yes.
100% revenue growth. I mean, like it's so they even announced like the cool thing about Figure is they have like 500 employees. You look at the actual revenue that they're doing, it's very impressive. There has been some additional costs just because they're building so many things at the same time. But they'll announce things like this. This is an auto lending platform. They're not securitizing these loans, but instead they're actually bringing this through vertical integration. That's a Figure. Democratized Prime. Man, I always forget what DART stands for. It's even in my write-up. And Figure Connect. It essentially like all this stuff, and over half of the revenue from Figure as well is all capital light stuff. That's just platform revenue, fee-based revenue, kind of like the loan platform business. It's just all powered by crypto. Ridiculous savings from using crypto and that vertical integration. So it's like, yeah, the market thinks it's a crypto name, so it should be sold off. And it's also financial, and it sure is. Like, I'm not saying everything is fine and rosy in that segment, but it sold off like 25% in a day. And I'm like, oh, okay, like what in that report was concerning? Now, there were a couple of elements. Like one was Mark Cagney is not the CEO, Mike Tannenbaum is, but Cagney is the president, and he's the guy that actually started up.
His name is Cannonbomb.
Cannonball? Yeah, Cagney, Mark Cagney. The founder of SoFi is the founder of Figure.
No, the other guy. His name is Cannonbomb.
Mike Tannenbaum with a T. Oh. He's also originally a SoFi guy. Cool. Worked at Brex as well. Another SoFi person that was a co-founder. But yeah, he was in the White House. He's like, well, I can't be on the call. I have a meeting at the White House that they wanted me to. Like, that's never bearish. The take rate was actually a little bit lower than expected. They did shift that a little bit, but yeah, Tannenbaum.
Yeah. So anyway, sorry, man. I'm so unserious. Go ahead, please.
Yeah, like just looking at this company, I'm like, okay. Other than it just reporting on the wrong day and financials melting down, I'm like, this shouldn't be trading at this. And now the frustrating thing for me is I'm basically out of cash. So for me to buy more, and there is an IPO lockup date. I think it's the 8th of next month. So you might see some selling pressure just as people are able to sell that have been in Figure since 2018 into the market for the first time, even if it's a lower amount. I don't think it'll be meaningful necessarily, but it's something to keep an eye on. And not everything's perfect at Figure. There are some risks, but I'm like, dude, the market went just 3 months ago in earnings. Every single name, like the market only cared about revenue growth. It cared about nothing else at all. And now the market's really excited for like Crocs, which is like negative 3% year over year revenue. It's like, so you don't care about 100% revenue growth. You don't care about 70% revenue growth Palantir. You don't care about 50% revenue growth SoFi. Okay. We'll see how long that lasts. Now, it can last longer than it should have lasted any time at all. And there's a price that's too much to pay, but man, the market just like really shifted and turned and is at the point like, if you even could possibly be disrupted by AI, if there's like a 0.001% chance, or you are growing too much, we're just going to sell you off. So, yeah.
I agree. The market is being irrational right now, but there's forces at play that we don't necessarily know about, maybe underneath the surface, the Jane Streets of it all. Express Investing, thank you for the 5. New Zealand dollars saying, great to see Roy getting straight back on the horse after his recent divorce from PayPal. Dude, it is a divorce. He hitched his wagon to Alex Chris, and Alex Chris took half of his shit. That's exactly what a divorce is. All right. He made some lofty promises, didn't follow through on them. The relationship soured, and Roy lost half his money.
Thankfully, not half, but it was an opportunity cost in addition to a loss. So it's a frustrating thing.
Ori, thank you for the 17 shekels. Tevis, do you need any coding knowledge for the product you developed? Dude, I don't have any coding knowledge. I mean, I've been working in tech for the past decade, but not as a developer. So I have like my technical prowess is limited to system architecture, but not like I know some Python, but nothing that's like I could never get even close to building this myself. And but I do know to say like, all right, let's run, let's do CI/CD for the rollout. How do we structure the actual cron jobs? Like what databases do we want to have for, like I have two tables, for example. I split up the schema into two tables. One of them is for like a hot data schema, so for the last 30 days, and it updates more frequently. And then the other one is like a cold data, so it's like historical data that doesn't update at all, but it's just there for reference. And so the limit of my technical knowledge is basically like, how do I want to architect this so that it runs relatively smooth? But if I looked at the code base, it's probably like all spaghetti code in there. It's not going to be like, anything clean. So there is probably a upper threshold as to how far I can push this with regards to features. But right now it's looking fine. Like I made some performance improvements yesterday, so it should be operating faster. I'm actually adding more to insider trades today. I added a notification system yesterday. Added a whole bunch of other features on funds yesterday. So I don't have extensive technical knowledge from that perspective, like in that granular level.
Kevin 702's comment at 626. Circle. Yeah, not that one, but the earlier one. Yeah. So do we know why market loves Circle but not Figure? They're both crypto native and both growing at an impressive clip. And Circle actually reported earlier this week, and they killed it. But like, there's a few differences. Like the main one is the market really understands Circle quite well, and it's very easy to understand. Figure is a really unique company, and there's still things that I look at and I'm like, I kind of understand certain parts of it. Some of the parts I understand extremely well, but it's not just a financial company using like a crypto wrapper or something like that. So Circle, your stable coin was last year, but I mean, there's still a lot of growth there. Very easy to understand how they make money. Very easy to understand where they're going in the future. And then like, if you look at what they did, I just pulled it up, 77% year-over-year revenue, which, yes, it's lower than Figure's amount, but it's a massive beat ahead of expectations versus Figure's was pretty much known because they released preliminary earnings numbers anyway. And same with adjusted EBITDA, adjusted EPS as well, significant beats. So that's, I think, the main difference. And then the Circle is not a lender. Figure is, and right now with what's happening with private equity, right now what's happening a little bit in the economy, although jobs numbers were just fine, PCI was hot, there's some concerns there. So any name that's lumped in that space, including SoFi, really got hit today, just nuked. Whether it's deserved or not, the market is in mood to shoot first and ask questions later. And that's really the case what's been happening. Circle's just not in that bucket.
Yeah.
So Anthropic, Pentagon?
Yeah. Anthropic, Pentagon.
And then let's take questions after that. So essentially what happened was Anthropic, like XAI, like OpenAI as well, are used by the government, specifically the Pentagon. And there was some concern by Dario, the CEO of Anthropic, regarding specifically implementation of their technology. And this comes actually from what happened with Venezuela. Claude was used in that operation. Palantir was used in that operation as well. And the CEO had some concerns. And his concerns seemed to really crystallize around surveillance, public surveillance, and also regarding allowing things in the future to just like automatically kill without human oversight, which is how you get Skynet. So I understand those. I'm a civil libertarian, so as a result, like, yeah, I don't want the government doing those things either. And the Pentagon's take with that was, well, you better comply, or else we will put you on, and help me with the name of the list, supply chain risk. So it's basically it's a term that's usually used to indicate like a foreign counterparty risk specifically. Yeah, there we go. We want to pull that up. This is the tweet from the head of the Department of War. So it essentially gives 6 months for not only for them to kind of deplug from Anthropic, but they also put them on this. And so, yeah, right there. No, effective immediately, no contractor, supplier, or partner that does business with the United States military may conduct any commercial activity with Anthropic. And there's essentially a grace period there of 6 months to allow for seamless transaction. That's think that applies to not only. What's that?
That's just the offboarding period for the department, like the DoD or Department of War, whatever you want to call it.
Yeah.
Because they were working with Anthropic and they're like closing out their deal, and that's just like to offboard seamlessly.
Yeah, and I think that's. I mean, I don't think that's justified at all. I think that this is way overstepping.
Well, Trump also posted on Truth. Let me pull that up right now, because he also had some choice words to say about this. Yeah. Let's see what El Presidente had to say. Blah blah blah. We'll just focus on this paragraph.
Yeah, don't read the all caps stuff.
I'm directing every federal agency in the United States government to immediately cease all use of Anthropic technology. We don't need it. We don't want it. We do not want to do business with them again. 6-month phase-out period for agencies like DOW who are using Anthropic's products. Anthropic better get their act together and be helpful during this phase-out period, or I will use the full power of the presidency to make them comply with major civil and criminal consequences to follow.
Which is ridiculous. And I understand, like, from the government's framework, you don't want private companies to basically say, like, when you're in the middle of an operation or something, no, you can't use our thing for that. There does need to be established some sort of guardrails. And what's interesting is Sam Altman actually came in to this conversation, and there's, I don't know if I would say bad blood, but there's definitely beef between him and Anthropic's team. But nevertheless, he came to their defense and said, hey, I get it. And he's trying to serve as kind of a middleman, a broker to try to broker a deal. If you read too much into Pete Hegseth there, it sounds like, nope, it's over. It's done. Forget it. They're moving on. But I mean, like with OpenAI standing with them, it seems like there's a number of employees at Google as well that wrote, it's a small amount, but had some concerns, much kind of like it was with Maven way back in the day, which Google lost as a contract. I think what really needs to happen here is there needs to be, they need to sit down at the table and say, okay, I would like the government to guarantee that these will not be used in public surveillance, and they will not be used, just to automate killing. Like, there should not be an issue with that. And then also, like, but you can't just pull the plug whenever you want. So, we're not going to do this. You have our guarantee. If we do this, then you can pull out and whatever. But, the government shouldn't be involved in those things. But, yeah, I don't know. It takes rational parties and negotiation, and we'll see if we get there. It's kind of wild, though, like the Anthropic ramifications, because, like, Palantir, case in point, they use Anthropic. They're partnered with every single major LLM just because they don't have one. They've always seen it as a commodity, but they want to make sure that that everybody that's using Palantir can use their favorite LLM. So Palantir is not going to be like, oh, just because this has been done, all of a sudden we're going to just remove Anthropic access for every single one of our customers. And yet the stock was up today. So I'm like, this is weird. It feels like there should have been a lot more talking before basically the declaration of war against each other, so to speak. So, but that's a major thing to kind of keep an eye on there. Yeah, Jarrett, you say that's what Palantir has done for decades. No, they don't do surveillance at all. They're not involved with the automated killing. Now they do help with targeting for military applications. I don't like necessarily every single thing that Palantir does, but yeah, the surveillance stuff, it's just a flat out lie. I don't know why people mischaracterize Palantir as doing that, but it's the opposite of actually what's happened.
I mean, look, I don't think we know all the details, right? So I don't necessarily know if it's Anthropic actually standing up for some civil liberties or some government overreach, or whether it's like Anthropic being uncooperative, where others are. I do, however, think that like if Anthropic doesn't comply, there's going to be a line around the block for others that will comply, just because they want to have that level of access to work with government agencies. So I don't know, maybe I'm a little bit more nihilistic than you in that sense, but I do like that if this is in fact around surveillance, broad surveillance, well, that's been the case since 9/11. There, like you, whether you had AI or not, and that's going to be the case whether it's Anthropic or not afterwards.
Like I don't know. I do think there should be a framework of like these are the guardrails of government can't use a product for these specific applications, and outside of that, the Anthropic and OpenAI, they can say whatever they want, but their product's going to get used across the board for all these others. What that is, that needs to be negotiated out and clarified. But with OpenAI standing together with Anthropic, I expect probably Google, just because they tend to lean this way anyway, will do the same. And even Elon Musk, like he does not want surveillance or spying. And I'd actually be a little bit surprised if he didn't just say, yeah, these guys are right. We need to come to the table and discuss and figure this sort of thing out. But
I mean, he was actively trashing Anthropic, and he has been aggressively. And I'm just like, dude, I'm all on board for you to trash Sam because you guys have personal beef there. But it's like now you're trashing Anthropic. How about you just build a better mousetrap and stop complaining?
Yeah.
You don't want people to use them? Great. Build a better product. Otherwise, it just sounds like you're kind of like, I don't want to say the word, but yeah.
Yeah. It's kind of wild too that, and also concerning as a citizen that they couldn't just, and you're right. Like optics, it might be one thing that they're positioning it as this, but there's probably a lot of other things underneath the surface that we're not aware of. But if it's really about surveillance and if it's really about targeting, not targeting specifically, but automatically deployed weapons based on AI only, you would think the government would be like, okay, let's at least sit down. Let's talk about what that means. Let's get some things in writing and we'll go from there. But yeah. I don't know if it's that.
Does anyone use Grok over OpenAI or Anthropic? It seems like an inferior product, Kevin is saying.
It is. It's good for some things, like anything that you need to find that's connected to X, just because it has that as a platform. It's very good with that. It's pretty good with recent news as well. Gemini is probably the best of the best. Anthropic's very solid. OpenAI, it's probably better than Grok too. I don't know.
You know what, Ron? This show is turning like that bootleg weekly show. I don't know if you've heard about it, but it's been 40 minutes now, and we haven't jumped to the Q&A yet. What is going on? ¿Qué pasa?
Well, I think maybe it's time. But yeah, it's certainly like this is just another one of these several things that are in the macro right now that are uncertain, and the market just doesn't love uncertainty. Plus, we're in a mid-cycle year. So real quick before we pivot, like it wouldn't surprise me if we have another 6 months of just kind of churn. I don't think it's going to be all year. Earnings are actually really, really good. I actually saw an interesting figure related to SaaS that every single company that's reported, I think this was on Tuesday, had reported had beaten across the board.
Well, I don't know if you saw this. Yeah, exactly. They'd beaten across the board, but I don't know if you saw this. They don't mean jack in this market. So this is the earnings laid out. Who reported what and what the S&P did, and it's just like there's been this ceiling here, and it doesn't matter who reports. It doesn't matter if they beat. They are not. We're not breaking above that 7,000 mark, and we briefly did, but we just got rejected way back. So, yeah, such is life.
Yeah, and it could be early that we bounce back, but it can take a little while and be range bound, and it's just annoying when you're in the wrong sector and space, and like Walmart's trading at a 60 times PE or something like that. It's not a 60 yet, but it can happen.
Okay, give me one quick second.
You can just thank him for the donation and not read it.
Yeah, I was gonna say like, cool way to burn your money, Jim, because you didn't get a free question out of that. Jim Carne Asada. It's like that's a cool name. I'll give you that. But
Walking Bum, thank you for the $10. Really appreciate that. Yeah, I don't drink beer, but Alani's, Monsters, that sort of thing, coffee occasionally. Yes, thank you guys.
All right,
lots of questions. Where do you want to start?
I want to start. Thank you. I want to start. You guys can ask questions, but I'll start reading out questions. Hold on, let me remove this, remove that. Does SoFi technically still qualify for S&P 500?
I think so. Let me double check. Market cap 22.65. 500 inclusion requirements. Gonna double check because I keep changing this. 22.7. So yeah. One more time. Yeah, it's just under. It's 50 million market cap under. So officially, as of now, it does not. I hope Noto buys.
Yeah, so let me actually talk about that. So I posted this little snippet from the interview with Noto, and basically he was saying, maybe we just want to play that. It's just 1 minute long.
Yeah, that's fine.
And okay, cool.
I think it's very relevant.
It's very relevant. So
whenever it was.
Okay, so Noto here is saying, can you guys hear this?
Anthony, back whenever it was $7, this company
it's soft, but yeah.
Giving back to myself and to Tevis and many of the other retail investors, but also you were a buyer of the stock. We just recently saw that one of your executives made an insider purchase on open markets. Is there a possibility that even you are potentially looking at this stock as being undervalued and potentially looking to double down on your conviction?
Yeah, I think, as I mentioned, I think that the stock's undervalued and I would be buying it here. I really can't buy or sell the stock without significant tax implications until March 1st. If March 1st was last week, I would have been buying the stock. Now, that doesn't mean when March 1st gets here, I'd buy the stock because there are always factors that can cause me not to be able to buy the stock. If we're looking at an acquisition, even if it's not going to happen, it's like we're seriously considering an acquisition, I'm not going to go buy the stock. If March 1st was last week, I would have been buying the stock. I wasn't in possession of any material non-public information. There was nothing to block me out. Otherwise, it's still here on March 1st. I think it's undervalued and I'd be buying it.
If it's still here on March 1st, I think it's undervalued and I'd be buying it, assuming he's not in possession of any material non-public information. And guess what? On February 6th, when that interview was conducted, SoFi was $21 and today it's $17 and change. Safe to say it's still here.
Yeah, like there's nothing wrong with SoFi. Like you look at other names that are in the space, there's some that have been more volatile than them. Like Robinhood's beat up. You look at Block. Although Block did have news with the layoff and the AI stuff, but Block was smashed to bits. Fiserv smashed to bits. PayPal, which they have their own issues, but smashed to bits as well since the beginning of the year. And it's like name after name. Like you can look at the buy now pay later names, Affirm, Sezzle, smashed to bits, Klarna as well. anything in payments, anything in fintech. A lot of banks as well just hit really hard. So I see a lot of frustrated shareholders that are like, fire Noto and this and that. Like, look at the actual numbers. Not, I know that the biggest number is the share price for us as investors, but they're executing incredibly well. Nothing in this company is getting worse. It's all getting better, meaningfully so. Is everything perfect at SoFi? No, they've never been a perfect company, but they're a very, very good one, and they're really undervalued here. So S&P 500 is not the thesis for SoFi, but between an insider buy, which might keep or maintain the market cap to be able to get in, and induction into the S&P 500, we might have found a floor. But if that doesn't happen, this can go lower. Do you think we see single digits, Tevis? Yeah, something would have to be catastrophically wrong, not just with SoFi, but with the macro in the United States for us to see that. And I don't think that we'll see that. You're muted.
I don't think it's going to happen unless something drastic happens. And yeah, I mean, I said this a couple days ago and it went lower. So no more tweeting for this guy. But we'll see. I don't think we see single digits, but I bought more today. I bought more and I posted about it. And here's the thing, man. All right, this is a lesson to all of you. If the market is dipping on a day like today and everything is down over 5% in your portfolio, don't buy in the beginning of the day. Buy towards the end of the day, because what's going to happen is you're going to have it bleed throughout the day and you're going to not get the bottom or not, get close to the bottom. I bought, what did I buy? I bought this. These are my trades today. I bought 500 shares of SoFi at 1789, and I bought. I closed out my Nebius puts yesterday or 2 days ago on Feb 25, so 2 days ago, and then I just went ahead and reopened them. But I reopened them for May 15th, so I sold 4 Nebius $90 puts, and I collected $14. I think it cleared like $14.64 or something. So those are my 2 trades of the day. Ron, did you make any trades today or maybe this week? Let's say.
This week I bought Figure. I used basically all my remaining capital I bought it actually late last week. I did round off some. I added some Nebius at the very beginning of the week, and a couple of little buys, and I'm out of money now. So I have pretty much nothing left. It's like I think if I put my 4 accounts together, I might have $1,000 to buy. So a little money coming in every other week, but yeah, if I'm doing a meaningful buy at this point, I got to find money for it, which usually means trimming something else. So that's a tough reality. Is there's so many opportunities and deals, and I've only had like really 2 stocks do very well this year, and I don't really want to trim either of those. So yeah, it's a tough place. You're muted again.
Sorry, dude. Can I show you something cool?
No. I guess so.
Let me see if it works first. I'll show it to you in a couple of minutes because it's just deploying right now. It's a new feature that I just worked on. Okay, let's move on to the next question first. Tevis, when the Nebius, dude, I don't like. You guys are the only ones that remind me for the Nebius videos, so I'll make one for you. Hopefully, at some point, I'm going skiing tomorrow, so if I don't break my neck, then you'll get it by this weekend.
Good goal.
I also have to book my ticket, dude. I'm doing 3 weeks in hopefully South America, but we'll see. Loading up on SoFi, we talked about that. Oh, hold on, donations. Thank you for the $5. You got to admit, Tim Sweeney has been adding some extra pressure on Noto and SoFi, right? I commented on that, and I said, look, if they don't license this song, we as a community will freaking riot. We'll start burning shit down.
It was great. And Ricardo, thank you for the $10 as well. Really appreciate you guys. Yeah,
Perfect.
man, the premiums. This was actually the first week that I sold Nebius covered calls, and the premiums are ridiculous, man. I did it just because I kind of expected what happened with NVIDIA as it occurred. So
They sure are, sir. They sure are. All right, hold on. Let me see if this is working now, so I can show you this. So, okay, cool. So one thing we implemented, Roy, it's not perfect, but it's we get toast notifications down. We can see what's trending, but that was yesterday. One thing we implemented is we can now see what's happened since insiders have bought or sold stuff. So I don't know, give me a stock with some history. Let's say this is
or block XYZ hit at earnings. Let's see that.
Oh God. Yeah, let's see if that's gonna work. This is the curse of doing demos live. Yeah, it doesn't have enough history. So I'm only going back 2 years right now. Let's do
Palantir has a ton of insider stuff if you want to do that one.
Okay, let's do Palantir. So yeah, I can now see the quantity, the value, and their ownership afterwards. And next, what's gonna happen is I'm gonna do like scorecards on. Yeah, so this is nice because like prior to 2 years, I could only see like it just says Form 4. So now we're just pulling data from the actual Form 4. And now the next thing I'm going to do is like scorecards that says like what is the likelihood that the stock has gone up based on their trades, next 90 days based on their trades, so on and so forth. So that's going to be fun. Let me just do one.
You released this to the public, right? Or just your
live.
Okay. No,
Yeah.
I mean, like, do other people have access to this?
Yeah, this is live. You can go here right now. So this is essentially I'm going to have this for all stocks. So I can see open market purchases, open market sales for the last 2 years, and I'm going to backfill it to other years. That's why it shows empty here. And then buy activity, insider buying zone, win rate, so on and so forth.
So if you guys are not familiar, by the way, Tevis did a video talking a lot about Claude and Cloud Code, which is created this product. Essentially, it was over a weekend. He's refined it further. So I guess you could say it's created in 2 weeks, which Tevis is an impressive guy, but man, like the LLM really killed it there.
Claude is very
your best employee.
Claude is, yeah. But like every day we're adding like me and Claude, we're adding like 2 or 3 big features. And so I really want to add some polymorph. You know what I was actually thinking of adding? Maybe I'll do this tomorrow. Yeah, so this is not BM&R, Catherine. Hold on, let me show you, because that part is not even me. That part is like it's fully trade view. So BM&R. So it says BM&RD. I don't even know if we have BM&R here, but BM&RD, it's like the French one, and this is pulling straight from trading view. See how it doesn't pull anything because it's not actually BM&R.
Yeah.
So yeah, definitely check your tickers as you're searching for things. That was human error. What was I saying? Oh yeah. So one thing I want to add is I want to add in the under the retail section, I want to add the Pentagon pizza tracker.
Oh yeah.
I want to start adding that and add it to the notification system as well. So if there's just like something flashing, it just like notifies you. I don't know. We'll see. If you guys have ideas, definitely go on the site, paperpanda.io, and there's a support button, and in there you can submit feedback for features and stuff. But yeah, Google Trends is probably coming up soon. Pentagon Pizza Tracker maybe, and we'll see what goes from there. But I want to do more with like insider buys and stock performance since insider buys and probability of win rate based on when an insider buys, so on and so forth.
You could even eventually spin it off to crypto and unusual, like kind of like unusual options for equity, unusual blockchain moves, like Look on Chain does.
I have an entire crypto page. It's not live. I'm just working on it on my local. And I just got access to the Arkham API. So like Arkham does all the, and so now I just want to do like, hey, these are the top institutions of known wallets that we have for crypto, and go from there.
Very cool.
Can it be hacked easy? Dude, it's all public information. I'm just building a visualization. There's no login. There's nothing. So what are you going to hack? You know, like there is some security, but there's also like nothing to hack. So I'm not collecting any email addresses or anything like that. So anyways, yeah, check it out. Let me know what you guys think. Appreciate it. It's called Paper Panda, paperpanda.io. All right, back to the questions and answers. I'll pin it to the site for you guys. HIMS at $14.50. Does it go under $10 with this downtrend?
It might. Neither of us are in it, but it doesn't deserve to be even trading here, despite a lot of negativity in and around the name, and a lot of it's deserved. But if it does, I mean, it's interesting there. I think the second half of the year could still be pretty decent, but too much. There's too much going on with it. There's, I think, simpler and cleaner theses out there, which is why I made my move with HIMS. Do you think it goes under 10?
I don't know. I saw some news that like what's his name? RFK Jr. was on Huberman or whatever, and he was talking about peptides. So I think if there is some peptides news, like this thing is so shot down that it could actually shoot up on some news. I also saw HIMS House. Maybe I'll throw this up on the screen. They reported on the short interest for HIMS. Now, Roy, what do you think the short interest has done? Has it gone up or down, considering the stock has gone down to $15 per share?
Shorts are like longs, tend to be greedy.
You think it's gone up? That's interesting.
So.
That's interesting. Well, do you guys think it's gone up or down? Because let me show you. It's actually gone way up.
Yeah.
81 million shares sold short for HIMS, 40% of the short float as of February 13th. This does not include earnings. This does not include the recent drawdown. On February 13th, I don't know, HIMS was my guess would be in the low 20s from what it was trading. Let me just take a look. So February 13th, HIMS was, about that same price, $16 a share, but doesn't include anything recent. So we'll see what shorts do after. But I think with more pressure, it's either going to lead to a big move upwards or it's going to lead to a big move downwards under $10. I don't think it's going to hit under $10. If it does, honestly, man, it would look interesting. Probably like an at the money leap or something.
Yeah, and I don't invest for short squeeze, but it adds a lot of volatility. Did we talk on Tuesday about Figure short interest?
Yeah, you were telling me it was like 30% or so.
50%. They're growing nearly 100% year-over-year revenue. They're profitable. I'm like, I don't get it. Now part of that is, there's I won't go into Figure too much there, but yeah, so some of these names, like, it's one thing, like if it's a Bed Bath & Beyond, where it's like, it's clearly this company is going to cease to exist at some point in the near future. And I get shorts flocking to that. But even like something like HIMS, but especially something like Figure, it's like they're profitable, they're growing. There's not even there, like all the regulatory stuff and risk. I don't know. But yeah, shorts, just like longs, get really greedy. A lot of times in these downturns, people overstate and be like, oh, the shorts are a genius and the bears are a genius. If somebody is a perma bear, and there's a lot of them out there, they underperform the market massively. But every once in a while, the market will throw them a bone, and people think that they're geniuses. Bears sound smart. Bulls make money.
Yes, exactly. Let me just bookmark some questions really quick to keep this going. It wasn't hymns like 60 or 70 a few months ago. It sure was. It sure was. I was actually cleaning up my desktop because I had a whole bunch of like screenshots and tweets and stuff on there. And I had a screenshot of a tweet where it was like, finally sold off the majority of my hymns at 55 or something. And I was like, oh man, I should post this. But then I was like, you know what? Let's not rub salt on people have lost money on this one for sure. Okay. Let's see. Why did you just say that? Congrats, Roy, on PayPal. That was a good. You can look back and say, "What the fuck?" Now.
Yeah, I will be at some point. It'll probably wait until after all the dissertation stuff is done, like the second half of next month. But retrospective of the early signs, and there were some. The biggest one, and I'll just share right now, is, and I've talked about it a number of times, is right after the Q2 earnings of last year, they went from very open communication, very easy to talk to, and it wasn't just myself. There's other creators as well that saw this, and also on X, and also on other interviews and things that they were doing. Their communication strategy completely shifted. Even some things that were planned, ended up not happening at all. And I speculated at that time that I was like, either the lawyers have gotten to them and like shifted, which it would have still been nice if they let us know, or possibly there's some sort of acquisition offer that's happening here. And I just didn't see it at there for PayPal. But I think what it was is just they knew after Q2 earnings, or like even into Q2 earnings, that the board was not happy with Alex and that he was going to be gone. So, but yeah, usually, and I should have, I recognized it there and it was a concern, but I should have given it probably more notice, just because like in a relationship, like just think about human people, that if you and your spouse are doing well, everything's great, and all of a sudden they just stop talking to you completely for a while, and things that were planned all got canceled. Dude, that is not just it's probably fine, it'll get worked out. No, that there's something wrong. There's something wrong. And case in point, there was. There's some other indicators too, but
yeah. I love how this like relationship analogy that we've had with PayPal this entire time is holding so true. Like, start off all excited, things are going to change, they make promises, and then communication dies, and all of a sudden you're divorced.
Yeah.
Let's you're in your glow up phase, is what Catherine is saying. Post PayPal, a happier, more single you.
Air has been a good rebound gal, so
not taking that bait. Next question. What price we go to 100% SoFi, and what price 100% 2028 leaps?
I would never go 100% 2028 leaps on any company. Like, even if there's something that's undervalued, like when I did 90% Palantir back in 2022, it was probably 75 or 80% shares. Now, I would have made a lot more money with leaps, but there's risk. And the risk is that the market can remain irrational longer than you can solve it. And there's a time ticker if you end up just saying, hey, it has to do it by this date. So be careful with that. But yeah, there's I still own some $10 strike calls, and maybe I'll just take an opportunity to roll those further out for SoFi and give them more time. I might even buy some more. There's a number of names where, again, I'm out of money, but if SoFi hits single digits and the world's not ending, like, I'm going to be adding a lot, irresponsibly.
That's my answer as well. It's like 100% is really a tall ask, because it means I get out of all the other things that I'm bullish on. If SoFi hits single digits, it would probably be like 80% of my portfolio for sure, where I just sell everything else except for maybe Nebius, or maybe even reduce Nebius as well, and just go into SoFi. If you guys were starting a portfolio on Monday following the recent sell-off, what is your top four? I don't know what the goal is. If I'm starting a portfolio, from scratch, I don't know. I don't even know how to approach answering this, you know?
Yeah, it's hard not knowing goals, time horizons, but like if it's for me, I have a 10-year time horizon on almost every name, if not longer. And so given that, I would go with the companies that had the highest degree of leadership and excellence, even though some of them are beat up right now. So, or expensive. So case in point, 10-year time horizon, nothing in my portfolio. I'd be buying Palantir here. It's still expensive. I'd be buying NVIDIA, probably most NVIDIA out of these four. Robinhood would be another one where I think it's generational company and leadership. For a fourth one, I'm not sure. There's a lot of names in my portfolio and even some outside of it that I'd be interested in. So,
Yeah, I mean, I think if I didn't have any positions, I would be looking to start my cornerstone staple positions. Because right now where I am is I can maybe do kind of smaller bets for a faster turnaround, but I know that I can do that safely because I already have like cornerstone staple positions built out over years. And if I was just starting off on Monday, I would look towards that. So, you know, am I going to be, let's say, okay, I started a portfolio on Monday. Am I going to be contributing to this portfolio on a weekly, bi-weekly, monthly basis? If yes, that's different than if no. If no, it's like, oh, I want to try out this investing thing. I might be a little bit more aggressive because I know that I'm going to put 10,000 in it and I'm not going to put anything else. Or if it's like, hey, I want to build good habits for the next 20 years, then it's like, great, Nvidia's at a fantastic price here. You know, Amazon's at a fantastic price here. You don't need to take big chances because you're going to build good habits. And once you build those cornerstone positions, then you can start taking chances on smaller market cap names that could have potentially higher upside. But it really depends on you to do the homework to say, like, what am I building my conviction in? You know, for me, SoFi is like, I mean, let me even check for you. After the purchase today, SoFi is a lot of my portfolio. It's 35% of my portfolio SoFi right now. And so that's just where I feel comfortable. You know, Nebius is 23% of the portfolio. So, like, you know, together, they are a combined 58% of my portfolio. Right.
Yeah.
And then comes Meta at 9%. And so the point is like, what do you feel comfortable being in to form, like, to build a portfolio around those key names?
Yeah. Can you throw up Thomas Ogden's comment at 708 regarding the 10-year time horizon? No, the one before that. All right. Yeah, he says, respectively, this is a really good comment too, and I want to talk about it. I'm skeptical of you two saying you have a 10-year time horizon on some of your positions, BM&R, VG, HIMS, PayPal seem like stocks you two are going to swing over 2 or 3 years. BM&R was that. It has always been that for me. HIMS, VG, and PayPal, not the case. With 10-year time horizon, there's still goals that happen. So if I have a goal for a certain stock, let's say VG pops to like $50 a share. It does not deserve to be $50 a share. It's a great company. I would probably be out VG entirely, especially with the opportunities that are currently here, just because, like, yes, I do want to be in that name long term, but VG at $50 a share is not the same as me buying VG at $7. The other is like with things like PayPal and HIMS specifically, when the thesis breaks apart, or if it strengthens. Like initially, Robinhood was just a swing position for me. And I'm like, okay, this company has executed incredibly well. My understanding has gotten deeper. I want to hold this like long term. Well, I'll change and shift depending on how the execution goes. So having that time horizon does not mean that we just close our eyes and we just say, okay, I'm going to forget that these companies exist. I think you can do that with just a select few companies that are out there. But as always, there are things that get stronger or weaker in a thesis, and it's okay to reduce, trim, or even add, even if it's higher than your initial price. And that's the way I take that. So there are names that are in my portfolio now that for sure, like 3 or 4 years, I'll be out for one reason or another. It could even be like a personal thing. Like hopefully this doesn't happen, but let's say one of my kids gets terribly sick. and we have huge medical bills, I'm going to have to sell a lot of stuff to be able to afford that. And as a result, like I prefer my kid over holding VG for 10 years.
Yeah. Yeah. And I think that was a great answer. And like, there's also stuff that we've held for as long as you've known us, right? It's like I've been holding SoFi for, like 4 years, 5 years now, ever since it SPACed. Roy's been holding Palantir for as long as I've known him, right? And it's just like, you guys know I was holding Tesla for like 5 years. There's stuff that we're in longer, but like for PayPal, the story changed. For him, the story definitely changed. You can even go back. This is all public. Like back to our 2024 video or 2025, 2024 videos, and try to see what the growth is for PayPal for HIMS. Neither of us are saying, "Oh, I'm so excited to invest in this company that's growing 11%." So it's just like if the story changes, then you have to adapt with it, right? So,
Yeah.
I think that's a key part there. Did you see? I think you answered this, yeah.
I didn't. You pulled it up. I know nothing about the company, the pump, or anything that happened there. But I mean, the market will miss. Like, there's always opportunities, and with some of these, like I don't know this at all. But if you're in a space where you're like, okay, this product, this company that I'm interacting with is absolutely ridiculous, and the market has it priced as if it's going out of business, that's alpha. So, and it misses it constantly. There's a hypothesis out there, the efficient market hypothesis. It's always been in shambles, but especially is these days.
Seriously, there's so much big money moving in such a volatile way that it's just so difficult to like actually like. I have, one of my cousins just started investing, and the poor bastard started in November, and I've just been trying to convince him to keep going with it. Because all he sees when he buys these names is like up 10%, down 10%, up 10%, down 10%. He's like, dude, what the hell is going on here? I thought this was supposed to be about building, wealth for your retirement and whatnot. And it's just so difficult to convince him otherwise because he just joined at such a weird time in the market. So, can we NVIDIA investors open a class action lawsuit against the administration for arbitrarily taxing NVIDIA on chips sold to China?
You can technically do lawsuits for silly reasons or not. That's a low probability. I don't think anybody's going to do that. So, it has a 0% chance of success.
If you have 7 Tesla shares, you too can start a lawsuit and win. So,
true.
Do you think there's more manipulation with all these stocks dropping like Jane Street stuff, or is this just macro?
I think a lot of it's algorithms more than manipulation. When you get to certain technical levels, when there's a certain amount of volume, when there's a certain amount of news, they're just trained to automatically sell, and that can create more selling pressure. Stop losses are hit, which triggers out more downside as well. And at some point, the bottom is caught. But yeah, we're not there yet, obviously. I usually am loath to attribute there is manipulation that happens for sure, but I'm loath to attribute very much to manipulation because you never really know outside of some very clear cases, and I don't think it's healthy for my own personal mindset or other investors to be thinking the game is rigged, because even if it is, there's still money to be made for us. But it's I think it's more like it's a weighted coin. So rather than having a pure not impacted at all, let's say it's slightly weighted, so instead of a 50-50 chance, 53-47.
Yep. Yeah. And then manipulation is very hard to prove or find. We'll see what happens with Jane Street, and I'm sure they're going to uncover other firms that are doing the same thing, but I don't think that's a default. I think algos and leverage are big pieces. I'm going to talk a little bit more about Jane Street with regards to BM&R tomorrow, because there's news that definitely came out, ever since that original video that I posted on Wednesday. It's definitely a factor, but I would say the compounding effect has made it so that macro forces have a disproportionate weight on markets today than they did 10 or 20 years ago, because they're just way bigger, and they move way more weight around. Okay, let's go here. I have a massive position in SOXL, the semiconductor ETF. What do you think of 3x leverage? I think 3x leverage is fine as long as you understand what you're getting yourself into, but I generally would stick to ETFs when it comes to leverage. So like the triple QQQ is probably the first thing that I think about there. I don't think I sit too well on 3x leverage on any single name ETF. Like even if it is like, oh, Nebius 3x leverage or SoFi 3x leverage, like you can blow up your account because of the decay on those. Like when you fall harder and it takes you longer to get back up. And so I forget there's a name for that.
Theta decay.
It is theta decay.
Mhm.
Yeah. So yeah, that's my thoughts on it. I would stick to an ETF.
Yeah, that is an ETF. It's semiconductor index. So
Yeah, I mean like a bundle of different stocks that
Yeah.
comprise an ETF, not a single name ETF.
Okay, yeah, I gotcha.
Like TQQQ or even SOXL, sure.
Yeah, in long term, like even I wouldn't want to hold the TQQQ, but I think it's a fine thing, kind of like buying leaps when you're like, well, I think over the next 2 years it's going to rebound nicely and go up.
Mhm.
Sure, just regard it as that. There is risk.
All right, and finally we get to Esther's question because she asked like 5 times. Air sold $14 million of Fox systems with major hyperscaler. This is the expensive one. More to come. Do you have comments? This is entirely for you, Roy.
Yeah, this was an order that I think was beyond the booking amount that Gain Erickson had talked about, the 60 to 80 million. We saw the package parts burn in. That was the larger order that hit 3 weeks ago. But this one, this is really good. Like essentially the Fox XP system versus the Sonoma. It's further upstream for testing. It's the direction where Air Test Systems has their deepest moat by far. They also added in the auto aligner, which basically automates the entire process. It's an add-on as well. And these machines have the highest margins anyway. And there was even discussion by some analysts on the last earnings call of like, well, since you guys have such a deep moat and you're really the only ones that are doing this, there is a weird thing with a China company basically stealing the technology and lawsuit stuff happening over there. Kind of old news from a year ago, but still relevant actually a little bit more than a year. But yeah, they're like, well, let's capture the market first, and then we'll look at finding that price point that the market will tolerate. And I think that Gain Erickson here is right. There's a reason why he has been talking about for a number of times their in-house production that they could do up to 30 units, either a mix of package part burn-in or wafer level burn-in per month, is because a lot of these smaller niche automatic testing equipment companies can't do that. So I think he's seeing between this customer, which is probably the largest customer, the probably Google, the package part burn-in one that's been coming, and a couple of other opportunities that are there. A lot of interested parties, a lot of demand, and he's basically saying, hey, get your orders in while you can, because we have so many that we can produce a month, still a lot, but there's not a backlog versus a lot of the automatic testing equipment have 5, 7, 9 month backlog. But yeah, this is really good. What we really want to see is, of course, either even more massive follow-on order with this, or some other companies that are in the space, which I think is just a matter of time, moving further upstream for the testing processes and enjoying the efficiencies from that.
Mm-hmm.
So I guess the last thought is, I think this is outside that 60 to 80 million that he was referring to. So there's going to be a number of contracts like this. Now, 14 million doesn't sound like a lot, but that's essentially what they did for revenue the last quarter. So it's not bad at all. If you go from 14 million to, like 50 million a quarter, then to 100. Yeah.
Was there any reason they sold off today, or just because it's volatile?
I mean, like everything sold off. They actually sold off less than expected. That's been the interesting thing, Tevis. They did have, a really volatile day I think it was on Monday, where it fell, considerably, or maybe it was on Friday of last week where it dropped down. But it's a name that is not well traded. When it's really running up hot or running down, then I think that a lot of traders will try to play it both ways because they're all about the volatility. They don't care what the company does or the catalyst, and that's not wrong. It just it's normal to see after massive gains, and it's at one point it was up over 100% year to date. People will take profit, especially in a soft macro. I actually would have thought that we would have fallen further given the current environment, but it's holding up nicely. There's a lot of real catalysts. I think there's further upside as well, but I did sell 25% of my position at $50 covered calls for March 20th. So they're not sold yet. If we run past or at $50, I'm okay letting those go, even knowing that there's further upside. I see another question there by Sklawman. Is Air my top holding? By a little tiny bit, it's not right now just because Robinhood is. But Robinhood and Airtest systems are like neck and neck. SoFi is just a little bit lower. But it was for a day and a half my largest position. And it will be again.
Yeah. It's definitely a smaller one. Anything else to add onto Air?
Yeah, like I've always regarded this as a second half name. So I think that a lot of people are speculating on that second half. $70 is what my thesis was with Airtest with price target. It can go higher too, but you'd have to see a lot of orders that are not made yet. And so I plan to hold this multiple years, but I mean, if Air does something ridiculous, like I have some people, and take it with a grain of salt, but some people that are in Air, they're like, no, this hits $200 easy this year. I don't think so. I think it's very unlikely. But I can tell you, barring like absolutely ridiculous orders and catalysts and things that are happening in the market, I will reduce my shares by a lot if it flies there, because that's like a 10x. That's over a 10x. So you got to take gains.
Yeah.
Good problem.
Yeah, man. It's just, Air is very small for me because I don't understand it.
Gotta do that stock take episode. It's hard though, man, because it's been running so much. I'm like, there's further upside, but like people have to understand it's volatile, and after a hot run, it's going to give up some of that. It just will. But it's held up better than I expected.
Okay, let's move on to the next question. That was a great answer, by the way. Does Palantir have the cash to buy Anthropic? No. Anthropic's latest valuation round is $380 billion, which is bigger than Palantir currently is.
Palantir has $7 billion in cash.
Yeah. Nobody's freaking out about the price action of Nebius and CoreWeave today. You must
kind of, yeah. You kind of know, like when you enter these names, they're going to be volatile, upside and downside. Now, I don't know why Nebius trades with CoreWeave with very specific CoreWeave news. It's weird, but I wish I had money so I could buy more.
Can we, as NVIDIA investors, okay, I think
we did that one.
Did that one. Isn't VWAP a Nicki Minaj song? I think that's just wow. I don't know that you can have a volume weighted one of those, but yeah. How would you buy the SpaceX IPO? Well, when they IPO, they're going to have a ticker symbol, and you just buy that. Probably not a good idea to buy the IPO because it's going to have a lot of. I think they raised the valuation again. It's going to be like 1.7 trillion or something.
Yeah, they'll have something called, most platforms have an IPO access, or they might call it something similar. And you basically make a bid on like this many shares at this price, and then you'll get one share. Sometimes a little bit more than that. But IPOs, like the time to buy them is usually 3, 6, 9 months after the fact. Like Figure, for instance, is hitting which is very common in the space, 180-day IPO lockup. So insiders cannot sell at all for that first 180 days. And when that ends, it depends on what happens with the share price. Now it's down much lower than it has been relatively. So I think that there will actually be a lot less selling pressure, especially because the guys know how the company's doing. But a lot of names, at that point will get hit pretty hard. And that right then is the time to buy if you want a long-term position. Now there's no guarantees. Sometimes you have things that just go up and to the right, but I think that's an exception for most IPOs.
Okay. Sorry about that. Let's go. Yeah, so Esther said, disagree, the Fox sale is a catalyst. I'm not sure if she was responding to you or somebody in the chat, but
it is a catalyst. Yeah.
If there is some other question or point of clarification there, just let us know. I wonder what the favorite pizza is at the Pentagon. Pepperoni. I don't even know what the favorite pizza is like. Generally, that's a trivia question for you. And my screening questions, not really. I'm the wrong moderator for this. So I will screen if it's like profanity or anything like that, but I have a pretty wide aperture for what I'll throw up on screen.
And this is Fiesta Friday, so it doesn't even have to be relative to the markets. It can be off topic.
Yeah, that Cardi B song was the Fiesta part of the show. Does your server scale as web traffic increases? That's the idea, Jonathan. I want to do that carefully so that on one hand, I don't have like timeouts and I don't have enough workers for like you'll just see noticeable lag on the site. On the other side, I don't want to break the bank. So if I have good web traffic, then that's a good problem to have. The idea is like, how am I going to fund that to scale it? And do I have the right approach from a technical perspective to scale it? Hence why there's a donate button. So I can keep it free for as long as possible. But like now I'm importing historical data as well for like the insider trades and whatnot. And so my concern is obviously performance and scalability there as well. Because like all the data is public. It's just a matter of visualizing it, but doing so in a very efficient way. Anyways, when will the market realize Anthropic and OpenAI are in business to sell tokens and not replace enterprise SaaS? Roy, actually on this question, did you hear Jensen's comments on this? I actually have a clip. Maybe I can throw it up.
Yeah.
Shall we?
I thought we were going to say that with Steve.
Okay. Yeah, let's save that.
Yeah. But no, that's actually the right take. Now, there are some SaaS enterprises that I think parts of them will be replaceable. Not all. Like the thing that's really misunderstood right now is outside of a few businesses, most businesses, even with the tools that are available with Cloud Code, are not going to be like, okay, let's get in the business of making our own software. They don't really do that. Cloud Code is there, of course, to make their life easier. And if they do have to build something internally, they certainly can use it. But yeah, it is not going to instantly replace business logic. It's like one of the sillier things that I've seen with all the financials melting down today. It's not the reason why they melted down, but I did see some comments on like, oh, Claude must be killing financials as well. It's like, well, no, like that's absolutely ridiculous. Now there is some impact if the AI doom cycle, and we'll look at the Citrini report as well with Steve, that is like the hyper bear case on AI. But if that played out, yeah, everything gets hit. But even Tevis.
I will get hit for sure if that plays out.
But yeah, it'll take, I think, a little bit of while just to replace that or for people to understand that. There's a lot of experts that are writing it in, and even not all experts agree here. So it can take, I think, a couple of quarters to play out.
Okay, let's see. But we will cover this more in depth in our 9 p.m. show, which is only 1 hour and a half away from right now. We gotta wrap this party up, Ron, soon.
Yep.
Wrap this Fiesta up. Why did you name it Paper Panda? Honestly, because I wanted to name it. Short answer is because that was just the domain that was available. I didn't want to I think I paid like $25 for the domain. And it sounded kind of fun, and it was just a fun project. And I was like, yeah, Paper Panda sounds fine. But that wasn't that wasn't in the top 10 names that I wanted to even make this thing. Just the top 10 names didn't have domains available. Are you expecting a rebound in the market or a lot of ups and downs this year? I think towards the second half, we should get a rebound. I think that's a consensus from both of us. But
yeah, I think in particular, October, November, December will be very, very good. The market likes certainty, and usually midterm years are not the best performers until after November. But I think even beforehand, we might see if we persist in the current range. But lots of volatility between now and then. But that's just my guess.
Sorry, I'm just looking for other questions here that I can bookmark.
Throw up Cuddle's question that you have pinned there, and I'll hit that one while you're looking for any last ones, and then we'll
go for it. It's a good idea.
So why has Figure got so much short interest? I think there's several reasons. So one is it ran further and further than it should have, and shorts saw an opportunity. Shorts are greedy, and I think they're overstaying. Now, that's a lagging read that we have, so it could be less than expected. It's not uncommon also for IPOs to be shorted, just because people know IPOs tend to sell off over time. Beyond that, they did have a phishing issue that hit some of their employees. They did talk about it on the earnings call and just said, it's not good what happened. We're doing some certain things, but there's no material financial impact to us. In addition to that, they had a blockchain offering, which was a little bit strange. It's not them tokenizing their own shares, but actually launching their equity directly on chain. It's the first time it's been done. It's doing that. They have a whole platform that they built, and they have to do that as a first mover. We'll see if others actually follow. I would say was not perfectly handled. Some of the whitelisting stuff that had happened beforehand wasn't great. They were doing a lower offering price than what it was trading at through the normal markets, which I think added some selling pressure. And there was just some confusion over that too. So, and then the last thing is, I think the market just is confused as to what bucket to put Figure. And I think it should fall under financials, which, it's not the place to be, obviously, right now. A lot of pain on that, more so than a crypto name, because, they're not here to sell crypto or make money from crypto. Crypto is throughout that entire organization. They're incredibly vertically integrated. But the way to think of Figure is, there are a lot of companies that handle traditional finance stuff very well. There's a lot of companies that handle crypto very well. There are almost no companies that handle adeptly both of those. Figure sits in that intersection. SoFi, I think, would be there, except they lost a lot of that when they had to give up crypto. And it takes time to rebuild that culture.
MDJ, wow, thank you so much for the $70. Says, nice chins up work on a rough week. It's Fiesta Friday, sir. That's what the Fiesta means. All right, dude, I think we have to talk about, I know we're going to talk about this at 9 p.m., but holy moly, this thing sold off. And NVIDIA, 17.4 PE. Earnings were brilliant. As always, fantastic numbers. And yet the market, as always, doesn't seem to care.
Yeah, I kind of expected. I didn't actually think it was going to fall as much as it did after earnings, but I figured it might fall just a little bit. It's been kind of stuck in a range. And it's just because going into the earnings, I was like, okay, we've already seen ridiculous numbers from NVIDIA. We've had a great read from a whole bunch of other companies about what's happening in the space, about the ROI, about the CapEx spend. It's crystal clear. We've already had Jensen on a ton of podcasts and presentations say all these really bullish things about what's happening. And so I was like, okay, the twin narratives that are happening with AI are AI is going to kill every single business out there, the AI doom cycle thing, or that AI CapEx is just a bubble and it's going to dry up pretty quickly. It's hard for both those things to be true, but because the market kind of believes in both, it's not saying the same people believe both, but like if NVIDIA did too well, it would feed the AI doom cycle thesis. If they didn't do as well as expected, which I didn't think would happen, then it would feed the CapEx is dropping off a cliff. I'm like, okay, yeah, there's literally nothing that they can say or do that would shift this. I think it's just going to take some time. But yeah, it's completely mispriced. And it's the one where I bought some figure, but like NVIDIA is just like stupidly mispriced, and versus like a lot of the other names that are in our portfolio are more speculative and higher beta. This one is, especially for being a Mag 7 and the largest market cap company out there. But man, it feels like a really good opportunity. So I'll be adding to it as I get money, little bit by little bit. We'll talk more about it at 9 o'clock.
More to come, 9 o'clock. I agree, man. If I saw NVIDIA at 250, tomorrow, I would not be surprised. I think it deserves to be there. I think, especially after that earnings, I was like, all right, we're definitely going to break above, 200, and all is good. And it's crazy because it initially popped above 200 to like 207 or something. And I saw every single one of my holdings was green in after hours. And then the call happened, and it started dumping to like 195, and then every single one of my holdings was red after hours. I'm like, this thing is crazy. It just drags up or down the entire market. It's yeah. Let's see here. What will be the implication of the whole Jane Street fiasco on BM&R price action? How will the March 1st catalyst behave? So March 1st, I'm assuming he means the Clarity Act. So basically, if I have this correct, and you guys can keep me honest, the White House put a deadline on March 1st for them to resolve what's going to happen with stablecoin rewards, because he hopes to get this signed by April for clarity. So I think that's what March 1st is referring to. In terms of Jane Street, I think if Jane Street is like, honestly, man, I'm kind of pessimistic on anything really happening. Sorry, I just saw Matt's comment. We got our own representative here. I'm pessimistic on any, meaningful change happening here, because this stuff, like I said in that post, has been happening way before crypto, and it's going to be happening way after crypto, where large funds play in the gray areas, let's say. But in the short term, I think if there is less selling pressure on crypto because Jane Street has a giant, magnifying glass on their organization, then that's going to be good for Ethereum. And quite frankly, I was going to talk about this tomorrow, but like we're crossing over 31% Ethereum staked. Every single week it's higher and higher. I'm like, how is this still at this price? The amount of selling pressure is insane. And I have a clip saved for tomorrow on Michael Saylor where he's talking about like the synthetic derivatives based, selling that is causing even more selling pressure that is done by institutions. And I think that's just kind of criminal, because if 30% is locked up and you're trading at these lows, like we should have a lot of buying pressure, and yet we're still suppressed for a long period of time. So it's definitely institutions. And there's one big reason why they would keep it depressed is so that they can accumulate more for as long as possible. I mean, Jane Street, if we are to believe these news reports, was making up to $25 billion in one quarter in 2025, $8 million per day with that 10 a.m. Bitcoin dip. Like, it's very lucrative for them to manipulate.
And Star Buccaneers notes Vitalik actually selling ETH is not super bullish either. But yeah,
well, he's selling ETH to fund like initiatives. Like he came out this week and he was talking about the ecosystem, saying, hey, quantum is actually not going to break ETH because here's all the changes that we're going to, make. And so I'm not super concerned about that, because at the end of the day, like, this has to outgrow Vitalik if it's going to go anywhere.
Yeah, it's still, a lot of people just see that and they don't even ask why or what's going on. They just like, oh, if he's selling, I'm selling. So,
yeah. And so we'll see. I actually wanted to do the BMNR recording live again tomorrow, but I can't because I'm not going to be here. So I might record it tonight, like just before I go to, like, maybe around midnight or so. And so it'll be ready for tomorrow, but we'll see. But yeah, you guys might not get it live this week. What do you think about Clear Secure Inc. Earnings and rise? I've never heard of it.
I don't know if you have it in Canada, but when you're traveling in the United States, you'll see a Clear thing at the airports that you can basically pay a subscription fee and be able to go through the security line at TSA a little bit faster. I don't know anything about the actual company, though, as far as investing. So sorry about that.
Yeah, I don't know the product nor the investment. Where do you hedge when there's obviously about to be a war? You buy puts, Catherine. You buy puts on the SPY.
Yeah, I mean, like that's gonna be insurance for your own portfolio. Energy tends to do pretty decently in war. Commodities can as well. Names like Palantir or Lockheed Martin, those are options too to look into as far as a long position.
Oil.
Yep.
Precious metals. Both of those go up. All right. Let me tackle the Solana exposure question because that's asked twice. So Jordan asked, do we have any Solana? Which the answer is no, neither of us do.
Yeah, I did last year, and I just ended up buying more Ethereum instead.
Mm-hmm. Talk about air, dude. You got to make more videos on air because the people need that.
Yeah, I do need to do another one just with the little Fox XP order. It is important and relative to the thesis, so I might. I just made one where I updated my positions, just the top 3, and I talked about air a little bit. So, but yeah.
Do we want Noto to buy on Monday, or do we hope he doesn't? Then there's some acquisition in the works. I think either way, people are gonna speculate an acquisition immediately if he doesn't buy. I don't think it matters either way. I think it's going to be good for the short-term morale, but yeah.
Yeah, sooner the better.
Did the Paramount acquisition of Warner Brothers go through? Yes, I believe it did. It's 110 billion, I want to say.
Yeah, as a Netflix user, I'm disappointed because that would have been cool to have, but the stock likes it. Not buying it, rather.
What's your year-to-date return? I think I'm like -5%, -6% maybe.
Oh, you're actually better than I am. So my main portfolios are like about that, probably like -3, -2. I didn't check after today, so we'll have to see. I think it's like -12 overall, just because I have a lot of SoFi, BMNR, and so forth in the other parts of my portfolio.
Yeah. Cool. Sorry, I'm trying to do like 2 things at once, as you can probably tell. I'm bad at it. Thoughts on Nubank? I don't have any thoughts, so this is all you.
Yeah, they got caught up in the same thing as Mercado Libre did. Very good earnings, but with Mexico, that's one of the 2 places beyond Brazil that they've expanded into. Of course, they're expanding into the United States, also eventually Argentina. So great company. They'll be fine long-term as well. I hate that they got hit. I was actually thinking of taking some of those and buying a little bit more SoFi and Figure. I'm not going to do that here at this level, though. I think it's
like $15, no?
Yeah. Yeah, it was close to 18 before earnings or briefly after earnings. I'm like, well, if it's there, I'll take some and I'll just shift it over because I don't want more exposure to financials necessarily. So But I figured I'd move it from one bucket to the other. I have some leaps, and that's what I was thinking of taking some profit on, not the shares. So yeah, I like the report. I have not had time yet to go through. They always have a very long earnings report, and I just don't have the time to go through it yet. So, but I did a quick scan through, and I didn't see anything that was glaring to me negatively. So,
I don't know what that means. It's probably sarcastic. What about 2x leveraged in video? I mean, have you seen Nvidia's price action recently? Do you want to be leveraged in that?
yeah, I'd rather buy a leap.
Exactly. Yeah, took the words out of my mouth. I'd rather buy a leap. It's probably the better take, because like it's not great, dude. I have Amazon leaps and they're down like 25%. I'm like, oh man, that's not good. But they're for 2028, and so I'm like, after a while, like the losses don't seem good, but it becomes somewhat of a binary event. They either hit it or they don't hit it, and like you got time on the clock. And as we know, these companies can make a move. Like I think the difference between my leap being a home run blockbuster, freaking 3x return on my money versus me losing everything is like plus minus 25%, I think, plus minus 30%. It's like plus minus 30% on Amazon in 3 years. Well, 2 years, I guess. It's not the worst deal to make. And Amazon fell after earnings, so my leaps are down, 25%. But at least I know I'm not getting any theta decay with that. Well, I get theta decay actually with that, but it's way less volatile because it's spread out, and I'm not too worried about that. So yeah, I don't know where I was going with that, but basically for me, it's just like I've always done leaps instead of leveraged ETFs or leveraged positions. Did you already give your take on Duolingo? Holy, down 22% after earnings. Roy, what did you think of Duolingo?
Yeah, there a lot of internal numbers. I like that they released. User acquisition, for instance, was down. Now they do have more members that are using their product on a daily basis, which is good. But yeah, it looks like growth may slow, and that's it's no longer trading at an extreme premium. It's fallen a lot. I don't think I would touch it, especially like in the current environment. There's so many other names, even in just SaaS, that are beaten up, that are pretty clear reads, like that these are not companies that are going to zero. I don't think Duolingo is either, but easier opportunities elsewhere. Too hard bucket. I would not be a buyer here. And sorry for your losses there, Mac.
Yeah, let me show you guys something. I don't know if you saw this, Roy, or not, but this was like, I saw this today and it was crazy. This guy said, if I can vibe code this in 5 minutes using Perplexity Computer, which we should talk about at some point, Duolingo is legit going to zero. And basically what they made is they made a Duolingo clone, just vibe coded it. And I think that's super cool. I'm sure this is like, not going to actually take the company to zero, but it shows that moats are evaporating in the time period where we live, where you can just start vibe coding these experiences. Because it's like the way I thought about this, Roy, was what if somebody makes something like this and all of a sudden just releases it for free or 99 cents? And it's like, it's not quite the same as Duolingo. It's not as personalized. It's not whatever, but hey man, the value proposition is 1/10 of what an actual subscription might be at Duolingo. And so I do think that has the basis for disruption. Now you can say, well, they have this amazing marketing strategy and they have like a product team that will always think of new features, but yeah, they're always going to be first on things that they release, and somebody's going to copy them shortly after for everything that they release. And so I don't know, maybe this is like a death of SaaS conversation that we should have with Steve, but yeah, it's kind of crazy.
Yeah, no, this is impressive, and yeah, it's not Duolingo, but I think their biggest issue was them switching over to the energy system. A lot of their users and heavy users really did not like that. So um, I don't know, they're in a tough place. They made some missteps along the way. They tried to pivot fully into AI. They received pushback for that. They tried to retract. They received pushback. They're in a not a can't win and a hopeless situation, but tough.
Yeah. Um, yeah, I don't think so, man. Like, it's stupid for some things. It's not like I'm me saying like, oh well, I'm just gonna vibe code X and or I'm gonna vibe code Claude and just build my own LLM company. Because like there's a degree of difficulty with this, but like with Duolingo, what is their stickiness from a direct competitor's perspective if the UI and the UX looks exactly the same? Now you can say there could absolutely be something that I'm overlooking, but what I'm saying is now that the bar has lowered for everyday people being able to recreate these products in a very seamless way from a user experience perspective, not a security perspective, not a back-end infrastructure perspective, just a user experience perspective, it lowers the switching costs to some degree, in my opinion, because like, yeah, sure, I'll go for the no-name brand, you know? So that's just, I don't know, one person's opinion. I'm sure they'll be fine because at the end of the day, like Duolingo still has this technology available to them. So it's an even race. It's not like somebody has an LLM and another company doesn't. But
Yeah,
it's one extra thing to worry about. And that's the point that I'm trying to make.
and those three specifically, they're social media platforms. It's very different because you're not there because of the user interface or anything else. It's for the people that are there. So that matters significantly more so than what the actual interface looks like.
Let's see. I hear you use Claude Cowork on your Mac and then check it on via mobile phone as it also works. Why haven't you downloaded and used OpenClaw, or do you? I plan on buying the new M5 Ultra Studio. Yeah, so I think everybody at this point has come out with their own version of OpenClaw, right? Perplexity now does Perplexity Computer. Claude has Cowork, and they also have the mobile experience. I think Gemini rolled out something recently or not. But my point is if not already, within the next month, every major company will have an embedded version of OpenClaw. So why do I have to download some third-party version, which has security vulnerabilities that they still have? So I'll just wait a month and use the actual real, version supported by the company.
Yeah.
Y'all going to Singapore meetup? It's a 24-hour flight for Louisiana for me, but I want to go. I'm not going to go to that.
Nope. Yeah, I have limited travel time, so I'd love to go at some point, but no.
F, Mary, kill. Pancakes, waffles, crepes. Oof. So help me understand what is F in this context? Like I want to have it answer. Like how is that different from Mary?
So marry all the time, and then never have it again. So I could probably live without crepes, even though I really like them. And give me waffles over pancakes.
Thanks, Beard. Really, really helpful in the context of frigging breakfast foods. Okay.
Marry waffles.
All right, you guys are this is gonna be a hot take. I would marry crepes, I would kill pancakes, and I would F waffles. Those waffles are just more crunchy and they are just great. Pancakes are just crepes with more dough, and crepes are amazing.
Oh man, I forgot. Yeah. So if it's like crepes that I can have here in the United States, it's one thing. Like Indian crepes are like ridiculous, bro. And they're savory and spicy, even for breakfast. With coconut chutney, oh man. But I'm gonna stick with my answer because I can't get those here.
I'm talking about European crepes, bro, like they make in Europe.
Well, I've had those too, but yeah, the Indian crepes are the best. Indian breakfast is like underrated, dude. It's so good.
Yeah. Good question. Thank you for that. How are you hedged with? We answered this. Tevis going ski and water, dude. It's Canada. It's of course snow. What do you mean water? How long since your portfolio has been at all-time high? I think mine hit in October and hasn't touched it since.
It was either September or October. I think a lot of us in tech names, same thing.
Yeah. If a hyperscaler capex is starting to dip into debt and create negative cash flow, dude, this sounds like a math problem. How much more acceleration like capex is really left? Do you guys think they're going to go more into debt, increase more?
So yeah, like I don't hear. Go ahead.
I think there is definitely a possibility to extend further into debt, but also what we're seeing with these hyperscalers is we're seeing their clients front them the cash to be able to build out even faster because there's such an overwhelming demand. Meta, Google, and others are just saying, hey, here, take a prepayment and use that money to build out and then service later. So I think that there's always going to be a willingness, whether it's in that form or whether it's like, hey, NVIDIA is going to take $100 billion stake in your company now, and congrats, you have all this extra money for you to build out further. I think that the clients, the demand is sufficient where the clients will front the cash for the companies that are doing the build up to not rely on debt.
Yeah, and I think the rate of acceleration is going to decrease for the hyperscalers. There's plenty of others too that'll be buying. Keep in mind, like with NVIDIA specifically, there's nothing there from China. I do think at some point they will have, some. I mean, there's a little bit there, but not a meaningful amount. And there's a lot of other parts of the world that want in this. United States has been first mover here. They're not going to be the only mover, and we're seeing that playing out. So I'm not overly concerned. But yeah, Amazon might have to get a little bit more creative with some of these deals.
Yes, they will. Do you think Nodal will buy on Monday? Yeah, I think maybe not Monday, but I think next week he might for sure. But we'll see. Has JS been screwing with SoFi? Jane Street been screwing with SoFi since that took a 5.5% stake last August.
Probably not, but
yeah, it's possible. I mean, SoFi turned out that it was a really smart thing that they did, considering where the price is now, for them to have issued shares and whatnot at $27.50. So. Whoever picked up those shares on the other side is sitting on paper losses. And so we don't necessarily know how they're hedging or how they're managing that position. But from SoFi's perspective, even if there is some funny business going on, like I think they now have the cash that they need to operate with and they're fine. Is that fair to say, Roy?
Yep.
Are you going to say see you next Tuesday? Yes, Catherine. Thank you for these questions that I need to clearly screen better. Do we blame the market to pull back on Jack Dorsey's incompetence? Roy, you wanted to talk about this.
Yeah, I'm a huge fan of Jack and the company Block as well. No, not really. It's been kind of funny. So really what's happening here, and actually Sam Altman, I disagree with him quite a bit, and I distrust him on a number of things. But I think he's right here. He warned about AI whitewashing, I think is the term that he used, of companies basically blaming AI on layoffs that they plan to do anyway. Block specifically, way overhired, probably a great organization to work at and be paid for, paid very generously as well. And also last year, they had a all employees or all hands meeting where they flew out to, I think, a private island, gave away a lot of like freebies and Apple products and sort of thing, but spent a ton of money, covered airfare and everything for their employees. But, and so there was some pushback then, and I received clarification that this is a once every so many years. So it had been 7 years. The next one is it will be 9 years before the next. And so they spent not 63 million or whatever the figure is, 62 point whatever, but a lot of that increase in spending was from this one-time event. And then here today, Jack comes out and says, "Hey, guys, we're actually an AI company now." They do have like Goose that they've been using internally. They're doing stuff with AI for sure. But laying off 40% of your staff and saying, "Oh, it's because we're an AI company now," it's disingenuous at best. Some percent is probably because of AI, but a lot of it is Jack just is a terrible capital allocator. Absolutely terrible. Time and time again, we've seen it at Twitter. We've seen it here at Block. And he's great at creating things. He's great at products, and he should just stick to that. So yeah, I don't think that it's necessarily like it feeds under the narrative though, right? Of the AI doom cycle of being like, oh yeah, AI. And the sad thing is there will be other disingenuous CEOs that are wanting to save face for themselves that will use AI as an excuse. We've already seen it. I think we'll see more of that as well. Even if there is just a tiny bit of truth in that, 40% of the company is not getting laid off because of AI. It's because of incompetence.
Yeah, I think AI is just the excuse that not only Jack, but multiple CEOs are going to start using, similar to how they're using, back in 2022 when they wanted to lay people off. They're like, hey, sorry, and I don't know what that's necessarily going to do with regards to sentiment and tensions, and it's not going to do anything to assuage these fears that AI is taking your jobs. But hey, man, it's what Jack did is assigned to all CEOs out there of public companies where they're like, oh, wait a minute, if we fire half of our people, our stock goes up 30%. Interesting. That's interesting. And we can use AI as an excuse for that and not get any blowback. Okay, cool. Yeah, people are just going to, blame the macro. So I think that we're going to see more of that, but time will tell. Will there be uncertainty with NVIDIA? Seems likely, but Palantir should be fine in turbulent weather with Iran. Yes.
Yeah, agreed.
When's Trump going to stop doing and saying things? When he's no longer in power.
No, even after he will, but it won't matter as much.
When he's no longer... Never mind. What plan do you use for Claude? Do you hit the session limit often? So I did Pro and I ran out of my weekly tokens and I had to wait 4 days for it to restart. It was ridiculous. And then I went to the 20X plan and I found that I was only using about 25% of that on a weekly basis. And so now I scaled down to the 5X plan and I'm finding that's a good pace for me. So I use Max with 5X tokens and it's like 140, 150 US dollars a month. And sometimes I time out, but usually I'm fine. You guys don't buy TLT in times such as these.
You can. I don't. I've actually never really touched the bond market. So at some point, maybe I do when I'm closer to retirement, but I don't play either side of it.
I was asking if they bought stocks. I know what to do. What did they buy? We didn't change our strategy with any geopolitical events.
Yep.
Class on leaps, sure, at some point. We've actually had a lot of question around that. Have you experienced any notable limitations using Claude for app or product development? Generally pretty good. I think it depends on how good you are at prompting it. Because I'll prompt like I said in a previous thing, a lot of my prompts were infrastructure based, but it does everything you need it to. Sometimes there's minor UI things that it'll do wrong and it struggles to fix its problem, but generally speaking, it's fine. But yeah, I would say think about how you're prompting it and be like, hey, this is what I want to achieve. You know, let's work together on making a plan. Let's think about security. Let's think about infrastructure. Let's think about, performance optimizations. Let's think about CI/CD. Let's think about all these things, and let's make sure that this plan is comprehensive. Then what I've also done is, before I'll roll stuff out, I like every couple of days I'll have I'll open another session, and I'll just say like, hey, do a full security audit of the entire page. Do a full performance audit. What is the page load speed? What is the memory? What is the caching? All of these things. And generally it's pretty good, but you got to know what to ask it, which is similar to all LLMs, I guess. Okay. We know, was I skipping? Generally, I was a good student. I was lazy as a student. I was smart and as a result lazy.
Yeah, I've gotten less lazy. I don't have a PhD yet. It's PhD all but dissertation I defend on the 12th next week. Not next week, next month. So hopefully that'll go well. But did okay. I had good grades in high school. I was in the honors program in college, but my mentality in college was do the least amount of work necessary to be able to get the grade that I need. And that's not great. I had a lot of friends that much smarter than I did that could do almost no work and just show up and ace tests. So one even got a perfect score on the SAT. So I was actually the dummy of my friend group, which kind of helped. But as I went through like masters, I had very, very good marks, very good grades. And here at the PhD, summa cum laude, assuming I complete the defense successfully.
Yeah, it was so interesting because I was totally careless, lazy, not really thinking about my future. And then something changed and it's like a complete 180. And I can't really put my finger on it, but I just came back 1 year on my third year and I was just so determined to do all the things. And like my grades improved. I started doing like, all these like side projects and stuff. And I feel like that sort of work ethic has stuck through and it sort of just happened overnight. But before that, it was completely like I was just, sort of a bystander in my own life.
Yeah.
Okay. 3 favorite colognes. Oh gosh, I don't even know if I can name 3 colognes.
Yeah, I can probably name them, but I wear cologne like not even once a year. So
really?
Yeah.
No, I wear cologne like every day, but I don't know if I have a wide variety. I think I have, God, people are going to flame me for this, aren't they? I had Armani Code for a while, and then now I just stick with the Acqua di Gio. That's the.
Yeah, my wife is very sensitive to fragrances, so I tend to not wear much these days.
Yeah. Okay. Fantastic. That is the end of the Q&A period. Thank you everybody so much. Roy, Ron, anything else to add?
Yeah, it's just mostly what we talked about tonight are markets and financials. We're going to come up here in 50 minutes and have an episode with Steve focused on NVIDIA especially. Also some SoFi that we definitely are going to talk about, and SaaS and what's happening with AI. But so a little bit of overlap, but not too much with what we talked about tonight. And, if you guys are long-term investors, if you're in positions that you like, you've already made the moves that you need to on those really red days that are getting to you, it's okay to look away. You don't have to stare at the screen every single day. Sometimes it's okay to just let positions play out. Sometimes all the market needs is time.
Yeah, I just had a mini panic attack when you said in 50 minutes because I didn't realize it was 8:10. And bro, this schedule sucks. But that's something we can talk about offline.
Yep.
Touch grass for 50 minutes and then come back to this channel and talk to us again. All right. Bye, everybody. Thank you so much. This is Ron and Travis signing out. See you guys next Tuesday for the Bootleg Weekly podcast. See ya.
Later, guys.